All right, ladies and gentlemen, welcome back to another trading video. Now, today's topic, I'm going to be going over the exact trading model that passed me 100K in funding in 3 days. Without further ado, let's just jump straight into the Miro board and then we'll go over the exact trades that I took to achieve this. Okay, so the strategy that I applied to pass me 100K in funding in 3 days was what I like to call the mechanical PDX model. Now, I'm going to go over briefly why I think this model solves the vast majority of trading issues that people come up with, and I'm going to be breaking down how the model works and how you can apply it into your trading as well. So what is the mechanical PDX model and how is it going to be able to solve your trading issues? So the reason I like to use a mechanical model is because it's a clearly defined edge that allows you to consistently play the probability game. Now, in my eyes, trading is a simple math problem, and that's the way that I view it. And so being able to play the probabilities game is going to give you a predictable distribution of returns. And it's going to be able to give you a consistent result that you can reasonably rely on. And again, the reason I apply this mechanical model is because it's a clear rule-based system for systematic entries. And this allows you to clearly define whether something's a good trade, whether something's a bad trade, whether you need to take this trade or whether you don't. Very often what I see with traders is they struggle to define what is a setup and what isn't, and they struggle to know whether to trust something or not trust something. And so the whole idea of this mechanical model and having a clear rule-based system is to really stamp out any of this hesitation and uncertainty when it comes to looking and identifying setups. So the mechanical model, again, it helped me pass my 100K funding in 3 trades, 3 days, 100% win rate, one after the other. So this was very, very clean. And again, it's a very simple, repeatable, and consistent model. Right? It's not complicated. This is very often what I see with traders is they go down this discretionary route. And so they end up applying a whole bunch of different concepts. They're trying to be smart and trying to be clever when the reality is the market doesn't care how smart or clever you think you might be. All the market cares about is a consistent, repeatable pattern and edge in the market. So again, this is where I see most traders going wrong. They have multiple discretionary checklist. Okay, so every time they look at a chart, something's different, right? They're looking at a different concept, they're looking at a different price pattern, they're looking at a different trading model, right? And this hinders your ability to be able to forecast market moves and accurately execute a strategy and an edge, ultimately leading you down the route of emotional revenge trading and just a whole bunch of emotional issues that you're going to come across. So the way that I like to do it is very, very simple. Okay. And I believe simplicity is the most robust strategy that is out there. Right. And so we apply a very, very basic concept of market mechanics where we're looking for clear higher time frame bias in the form of supply and demand. And then what we're doing is we're tracking down to the lower time frames for, again, a very, very simple execution model. And this is really based just around the Asia range. Now, there's a whole bunch of content around the Asia range and different ways to play it. This is probably the most efficient way that I have found to trade the Asia range model. And it's simply an accumulation, a manipulation phase, and then a distribution phase as well. So it's a simple ICT, whatever you want to call it, AMD formation, 3-box pattern, whatever you want to call it. This is all that I look for, and it happens time and time and time again, right? And you can look on a chart and you'll see it happens so consistently. And so it's an incredibly powerful model to be able to apply. And this is exactly what we're teaching within the Alchemy Mentorship. And it's not just me that's taking these trades, right? All of my students on a daily basis are changing their whole trading outcomes, right? They're going from inconsistencies, they're going from, break-even dance, and they're starting to see consistency in their results. Now, the main reason for this is because they're finally having consistency in their execution. They are not just randomly applying concepts. They're actually consistently executing a model and playing the probabilities game. So that being said, let's just go ahead, jump into the charts and break this one down for you. Okay, so the position that I'm going to be breaking down is a short that I took on dollar CAD. This was taken on the 22nd of October. This was a Wednesday. And starting off on the higher time frames, okay? So we can see there's a few key points that I'll look for, and that is buy side and sell side liquidity. So previous highs, previous lows, and I'll look for some area of supply or demand. Now, looking on the daily, we can see that price recently took buy side liquidity. So naturally speaking, after price takes buy side or sell side liquidity, you would expect there to be some sort of rebalancing. So some sort of pullback in the market. And then we did have areas of displacement within here as well, fair value gaps and whatnot. But the supply that I was looking at was this area here. So we had price sweep previous buy side liquidity and then trade into this higher time frame supply. So naturally, at that point, I'm looking for a retracement in price. Now, when I look towards the lower time frames, and I'm looking at my H1 time frame here, again, what do we see? We have higher time frame supply. I have this supply region which price rejected multiple times. Again, lots of wicks here, clear failure to break higher. So what is my expectation now? I'm looking for another sweep of buy side. I'm looking for this to trade higher back into this supply region, and then I'm looking to take a lower time frame entry confirmation. So coming into the day, we saw price chop around, trade higher, manipulate into this H1 supply, and then that's when we're looking for our execution. So if I jump to the 15-minute, what can we see? So you can somewhat see this market maker buy model. So this original consolidation here, distribution higher, your second consolidation here as well. Then we have this further second push into supply. And then at this point, I'm looking for price to begin to form somewhat of a V-shaped recovery. And I'm looking for, a move lower. So we can play this one forward. And we see as price trades into this supply, we can see that price starts to chop around. And if we continue to play this further forward, price then begins to start breaking previous structural points. And we see close below these areas. Now, what do we see following this? We see clear displacement. So we see price clearly displacing away. And this is when I'll start looking for my entry. So we look for a move back into this displacement, entries anywhere within that area, stops very comfortably above the high. I believe I had around a 12 pip stop on this one, very comfortable stop loss. And then at this point, again, I'll look for a very mechanical, very simple profit target. Again, minimum 2-to-1 risk to reward. And as you can see, when we play this one through, we got tagged in. And then price just melted following CAD CPI news. So again, this is the exact model that I'm trading consistently day in, day out. The exact model that allowed me to pass 100K in funding in 3 days. If you want to learn more about how we do this every day within the Alchemy, check the link down below, and I'll see you all in the next one.